Let's take a look at some charts on Tezos from this week's article on Brave New Coin. So Tezos is a staking coin. 80% of the network circulating supply is being staked, which tells me there's not much else to do with it. People expect to get a yield on holdings at this point in the game, especially relative to competitors, relative to DeFi. HODL isn't really good enough anymore, so I think that's why the staking siren song has really taken off for a lot of people. Now, if you factor in general inflation and dilution, there isn't much of a gain, but it's a pseudo incentive to the point where enough people say, all right, I'll buy it, hold it in a bakery staking masternode, and let it do its thing. Like as long as they're buying and not selling, price will go up. That's just how it is, especially if most of the circulating supply isn't on order books, isn't necessarily on exchanges. 21% of the circulating supply is on exchange bakeries, which is a centralization issue. But it's also great for access for people who just don't want to deal with all the intricacies of every single coin they're involved with. Most people aren't just involved in one, they're involved in many, and when they can just stake it on exchange, set it and forget it, along with 10 others that they have, it's just simplicity, right? Seamless, easy. Most people in general don't care about centralization. They just don't. That's why these things work. So if we look at market cap compared to all the staking coins, daily transaction volume, daily fees, transactions per day, daily active addresses, and git commits, XTZ is in the red here, and it is basically first or second in everything. Behind ADA and market cap recently, ADA shot up on some fundamental shift. ADA's transaction volume is unusually high because of the fundamental shift that's going on from their centralized network to a centralized proof of stake, which will eventually become a attempted decentralized proof of stake network in a few months. But right now there's a lot of on-chain churn from stuff related to that. It's like in the millions compared to everything else. So Tezos is leading everything else but ADA right now. Tezos is also up there in fees, and fees are one of those weird things where it's good if fees are high because it says people are using the chain, block space is competitive and needed. It's good if there are fees because people can't just spam the network and create millions of transactions for no reason. Like Tron, So Tron, there are no fees, hence the asterisk, and transactions per day are in multi-millions. So is it really fair to compare Tron's transactions per day to all these networks that have fees on their chain? Not really, because it's really irrelevant, right? Like, it doesn't matter. Tron, you can have 10 trillion transactions per day. At the end of the day, if it's just garbage, it doesn't matter, right? So it's really hard to evaluate Tron from that perspective. Tezos is that transactions per day are high. Active addresses are continually rising. I'll show that in a bit. Definitely lower than Tron, but again, is it even fair to compare Tron to the rest of these? I don't know. Even Dash, which has this coin mixing thing on chain, is that a fair comparison? I don't know. Like they're different enough to where it's hard to actually compare them like for like because they just do different things. Git commits, Tezos is near the top here. So overall, Tezos looks good. The personal issue for me is just nobody's doing anything with it other than staking. At the end of the day, they're speccing on it or they're staking it. That's it. You can say there's tons of stuff in development. That's great. I don't get excited until it's actually live and people are using it. Because up until that point, it's all just hype, fluff nonsense, unless people are actually using it. If we look at all the staking networks, Tezos has 2 billion notional value being staked. By far the largest. EOS has got the second largest, around 1.8 billion. But it's just funny when you look at the market cap of Tezos, and then you look at the staked notional value, it's like, wow, those are awfully close. So, again, most people aren't doing anything but staking on Tezos, which is great. It's fine. It's an early network, yada, yada, yada. But eventually, they're going to have to do something to keep people on. DeFi, dApps, security tokens, the usual song and dance stuff, the usual hype. That's going to come eventually. It's going to come in waves. They're going to have stable coins. They're going to have all this stuff that everybody else has to try to get people to interact with the chain further, which isn't a bad thing. It's just that's the script for these coins in general. Again, 21% of Tezos held on exchange bakeries. I found out yesterday that Binance has an oversubscription to their bakery. So how this works is the bakery has a staking bond where it has to be equal to or greater than 1/10 of the total, I think what the math turns out to be. So you can have 10 times delegated Tezos on your bakery as you have staking bond. And what this means for Binance is they need to buy more Tezos to increase their staking bond, or people remove their Tezos from that bakery. The reason this is important is because I believe anything above the staking bonds allotment, the oversubscription, doesn't receive the staking reward. So this is Binance who doesn't receive the staking reward because they do all this centrally. So Binance has one wallet or however many wallets that they use to stake all this stuff, and then they distribute it on their ledger internally to users. So users all get a share. They may get a smaller share if if the bakery is oversubscribed. So Binance needs to fix that if they want their full staking reward. Most of the staking is happening on Coinbase. And here are all the top 18 bakeries. Nice little website, My Tezos Baker. So you can select any of these. These are all just validators, basically. Very similar to any proof of stake network. You can see the ones that are oversubscribed here. No bakery is as oversubscribed as Tezos is, or as Binance is. If you look at transactions per day and average transaction values, bit of an issue when I see, fees. Transactions per day fees. Bit of an issue when I see fees increasing and transactions flat. Usually says there's some sort of scaling issue, some sort of on-chain idiosyncrasy that's not apparent in the data here. For instance, if you look at ETH, you can see fees are skyrocketing for certain things. It's like, why? Well, if it's smart contract related, then those transaction fees for the dApps and the DeFi stuff are extremely high right now compared to just sending a transaction from address to address. So all in all, transactions slightly up over the past year and a half. Nothing super exciting, but not down, so that's good. Now, if you look at active addresses in the fill here, these are just continually rising, which I think is just all part of the staking thing. This isn't like what I consider economic activity, people transacting in Tezos. To me, this looks like wallets receiving Tezos for staking rewards. That'd be my guess. NVT in the line here continually is falling. That's bullish. That just says there's more on-chain activity. But again, if that on-chain activity is just staking reward related, is it really relevant? That's for you to decide, the viewer. Google Trends are up, certainly more than most coins. Not as bullish as it was earlier in the year, but if prices make all-time highs again soon, which they probably will, I expect this Google Trends to pop up again. If we look at Bitfinex long-short data, some technicals here, 50, 200, yearly pivots, VPVR, volume, and RSI. So the first thing that pops out to me is prices near all-time highs, prices above all VPVR congestion. So this says all this should be support now. We're kind of in the middle of the ladder of yearly pivots here. So R4 is R3 is next, R4 is next, R5. That's just how it works. Anything past R5 is typically bubble territory, too much too soon. Doesn't mean it won't go to infinity from there, but the general hypothesis I've put together for crypto is anything past R5, bubble. Volume was down earlier in the year, a couple months ago, and it's popped back up again. So that's what you want to see at all-time highs. You want to see volume increasing, not like spiking. Spiking volume is always fear or euphoria. So this was clearly fear, something going on here on March 12th. The sky was falling. But to see volume increasing is good. No real divergences here. Everything looks good though on trend. It's above the 50, it's above the 200. It bounced on the yearly pivot, it bounced on the 50, it bounced on the VPVR support. That's all what you want to see. So 355, 435, whatever I said in the article, those exact values is where I'd expect price to go next. If we pop on a pitchfork on this bad boy, it's just a trend channel with specific rules. So it's got an anchor here, here, and here. And it projects this trend channel. So far it's in the bottom half of this trend channel, just cruising. It wants to get back to this median line. No matter where price is, above or below, it always wants to go back to that. So it's currently around $8, which is a big move from here, admittedly. So this may end up dissolving shortly over the next few weeks if price can't maintain this aggressive trajectory. But that's certainly a possibility. $8 in the near future, probably by end of year. Honestly, if everything increases or rises together, 8 is not an impossibility. Looking at the cloud, it looks great. It broke below, broke back above,
briefly broke below, and now it's back above again. So the next thing you're waiting for is a bullish TK recross above cloud. Very similar to this is below the cloud. Very similar to here. Okay, you can see it was all, you know, dirtling. It was vacillating, perambulating around here, much like it is here. And then it gets this bullish TK cross 2 or 3 candles before the breakout even, and that was your go long signal. So that's what you're looking for here. Very simple. You can put an alert on that in TradingView or any other trading platform. Just watch for that TK cross, and that's your go signal. If it happens, it'll probably happen within the next week maximum. And lastly, looking at Tezos BTC, more of a ranging mess here. First thoughts are it needs to break this high before any long entries happen, just because it's been in this range for 7 months almost. So don't expect any miracles to happen in the middle of the range. You know, it just can keep bouncing, bouncing, bouncing. It's above the historical all-time high, the previous one, so that's good. You know, it's bounced there a couple times. It's bounced on the 200. It's recovered from being under the cloud a couple times. It's just a massive range. So when it's ranging like this, trend metrics fall by the wayside, and it's just easier to pay attention to. This is the high, this is the low. If it breaks the high, I long. If it breaks the low, I go short or I sell, and that's what I'll be watching for. Trend metrics look more bullish if this can maintain above the cloud with a bullish cloud. It's not there yet. Probably take 2 weeks for that to happen if it stays up. And this VPVR resistance is also something I'd watch. If it can break that with some volume. You know, volume came back a little bit, but not really. No divergences here. And Bitfinex long shorts are net long, but historically they've just been all over the place. They've been super short a couple times. They haven't really been super long just yet. So it'll be interesting to see if we break this high and longs get squirrely and really start adding here, because that's typically a sign of exhaustion. You know, it usually doesn't happen where people make money. So shorts increase or longs increase. It's another thing to watch in the future. But all in all, Tezos looks pretty good.